Oil prices are higher today, up roughly 1.5% as the U.S. and the U.K. strike Houthi targets in Yemen. That's raising concerns about a disruption in oil supply. Let's bring in Dan Dicker, founder of The Energy Word. Dan, just kind of break this down for me here. What kind of disruption are we talking about? And what does that ultimately mean in the context of global energy supply?
Good morning, Akiko. On balance, I don't find this to be a tremendous threat on global energy supply. What it is a long string of Iranian-financed actors who have been engaging against Western oil supply chain issues for decades. This time, ginned up by the Israeli movements in Gaza. And while, this is sort of a give and take in terms of the military action here, in terms of the actual ability for Houthi rebels to actually close down the Red Sea and kind of deny shipping lanes to the UK and the US and others, on balance, I don't find that to be a tremendous threat. Why oil is up today is more about the nervousness of traders who have been increasingly unenthusiastic about oil and have been as short as they've ever been since well before the pandemic. Now, to me as a trader, that is really the big deal that's going on in this marketplace. We have a lot of speculative players inside the fossil fuel markets who are short, and the ones who are normally long have been reticent to buy oil, even down here in the low 70s. And so anytime there is any kind of geopolitical risk that's kind of drummed up, you get some weak shorts who tend to, run for the exits, and that's why you see the rally today, which, quite frankly, isn't very impressive at $1.50.
I mean, and Dan, considering that at one point last year we were looking at potential projections of $100 a barrel for oil here, talk about the supply side here. Some of the issues that you're watching, especially when you think about Iran and Saudi Arabia as well. What do you think are going to be the catalysts to watch this year?
Yeah, Rochelle, this has been very interesting because while there has been some, issues on supply, what hasn't come across in 2023 and all of 2023 is the demand increase that we all expected post-pandemic, particularly from China. Also here in the United States, demand is down as low as it's been pre-pandemic, and that has gone against what has been the most oil produced by U.S. oil producers since before the pandemic. We're at a record of 13.2 million barrels a day. So what didn't kind of materialize over 2023 and into 2024 was the demand to go with what this, the supply shortage that the OPEC and others have been bringing to the marketplace. They have been bringing to the marketplace. So on balance, what you've seen is both the Saudis, the Iranians, and the Russians have been working really hard to try and find new markets for oil, even at these lower prices. The Saudis, for example, last week cut oil prices going to the east by $2 a barrel, which is, a pretty desperate measure when you think about it, with oil already down in the 70s. The Iranians have demanded more money from the Chinese for their oil supplies because the Chinese have also taken advantage of what is a very, very, very weak supply market to make very, very opportunistic deals with the Iranians and the Russians and others. So in all ways, while the traders are incredibly short, I sit here and kind of feel like they're kind of right. And at least for the time being, I do not see oil getting constructive despite this kind of short covering rally for at least the first quarter of 2024.
Dan, you're saying they're kind of right, as in the speculative traders, based on the supply you're seeing or the demand? Because there's been concern about that pulling back significantly.
Both. The supply has come up quite significantly, despite the cutbacks from the Saudis and the rest of OPEC, particularly here in the United States. And demand has been, quite frankly, pretty pathetic. particularly from China, which has been really the driving force of demand in the oil market for the past 3 or 4 years. And it's not much better here in the United States. There's been, despite quite a robust economy here in the United States and decent spending numbers and jobs and so forth, has not been the kind of concurrent demand increase inside of refined products that many of us expected to see. We just haven't seen it. We don't expect to see it.
With that said, Dan, what kind of levels are we talking about in terms of prices here? Low 70s? Is that kind of where you see it trending, at least in the next few months?
That's the million-dollar question. I hesitate to give targets. I would say that for now, it's the range is bounded by the high 70s, and on the downside, I would not hesitate at all to start wading into oil stocks, which are already pretty cheap, if we did get some prices significantly below $70 a barrel. But in terms of targets on the downside or their upside right now, I'd say we're range bound. But I am more apt at this point to kind of wait out this kind of demand supply problem with cheap oil stocks if they get quite a bit cheaper. They're already, for example, Exxon's already under $100 a barrel. If it got closer to 90, it would not be something that I wouldn't readily recommend to my subscribers around that level. So you have a sort of an idea of where value starts to make itself felt inside the oil market. Once oil gets below $70, there starts to be some serious value inside the oil space.
And Dan, just very quickly, because you mentioned the China turnaround story that hasn't materialized yet, are you predicting that will perhaps pick up this year, or is that still not on the radar?
Very interesting. I'm not the economist. I'm sort of an oil guy, and we've seen stimulus come out of China. We've seen all sorts of activity from the Chinese government try and stimulate, a post-pandemic growth spurt from China. And so far, it hasn't materialized. So, like a lot of traders, I'm waiting for a sign, and whether that will materialize based on what the Chinese do or don't do. Again, the guy from Citi who was on before, he was best able to answer that as opposed to me.
I appreciate that. We'll see if that Chinese demand for oil does end up picking up at some point. Dan Dicker, the Energy Word founder, thank you for your time this morning.